Good morning once again. What is residual interest? So residual interest means, as I told you, just a second, let me share the screen. So when we say residual interest, what it means is remaining interest or the net interest. So if you have some assets, let us say worth 10,000, liabilities worth, let us say 7,000. So the net asset or equity, this is nothing but 3,000, right? Now this 3,000, what it means is after paying off the liabilities, whatever assets are remaining, that is residual assets or residual interest, that belongs to equity holders. Okay. Yesterday we spoke about multiple step income statement. Now we'll look at single step income statement. The single steps income statement is generally not followed. Okay, so you will not find a single step income statement in most of the cases. Everywhere for companies will follow multiple step income statement only. So single step is not followed. Single step basically means show all the you know revenues and expenses, revenues on one side, and show all the expenses and cost on the other side. So basically what it means is you will show all the income together and you will show all the expenses together. Now in income, you'll also add the other revenue, whatever other revenue is there, whatever gain on available for sale securities there, all of that is added, and interest expense, your restructuring expense, all of that is shown separately, right? And net income is presented. So this is basically nothing but a simplified way of presenting the net income. All incomes on one side, all on other side, but this is generally not followed. For examination purpose, if at all you have to prepare, you will have to prepare in this particular manner, where you will prepare the multi income statement where you have. So I'm just quick recap for all of you. First, you take the sales, then your cost of sales, that gives you the gross margin, then selling expenses, admin expenses, depreciation expenses, gives you income from operation, then you take other revenue gains, etc. Right? Then other expenses, then that gives you income before tax, then income tax expense, income from continuing operation, then discontinued, and net income. So this is the format in which you will be preparing, and you will not be using the single income format unless it is asked in the question, right? Now another very important part, that is income from discontinued operation. Yesterday I give an example. I'll just again re-emphasize on the example for all of our benefit. Let us say a business has two divisions or two segments. Let us say one is your hotel business, other one is FMCG business. Two businesses are there. Now in hotel business, look at revenue and profit. Hotel has a revenue of, let us say, 3,000, profit of 200, and FMCG has revenue of 5,000, profit of 5 or 600. Okay. Now the company wants to sell off FMCG. Normally it should have sold off hotel, which is a loss making, but it wants to take advantage and it wants to sell off FMCG. If FMCG business is sold, we will lose out on this profit of 600. Correct? We'll lose out on the profit of 600. We will not get that profit in the future. So if you just combine both of them in present in financial statements, revenue of 3,000, or sorry, 8,000, profit of 400, the users will not have a, users will not have a idea as to what is the impact. So instead of that, if, for example, if I split it, revenue, continuing operation is hotel, so 300, profit 200, then profit 200 means minus 200, that is a loss. Profit from discontinued operations, let us say 600. Now if you look at the second presentation, what happens is you as a user will be knowing in future I will not have this profit because this operation is being discontinued, and accordingly you can take decisions whether to continue to hold the stock, whether to sell the stock, or what further actions you can take. So the idea of presenting discontinued operations separately is that the user should know what is the impact of the discontinued operation. Okay. Discontinued operations are reported separately from continuing operations in the income statement net of tax. So, now what can be a discontinued operation? It can be a branch, it can be a division, it can be a subsidiary, it can be a foreign operation, it can be a particular geographical area, it can be anything. No, so the revenue and all will be disclosed separately in the notes. On the face of it, you will disclose the net income generally. Any revenue and all will be disclosed separately. So it may include a group of companies, a component, or a business, or a non-profit activity. Items reported within the discontinued operation can consist of impairment loss, gain or loss from actual operations. All of these amounts are included in the discontinued operation in the period in which they are incurred. Now, what you have to understand, the results of operations of a component of an entity or a group of components of an entity or a business or a non-profit activity will be reported. When will we report in the discontinued operation? When it has been either disposed, we have disposed it, then you will show it as a part of discontinued operation, or it is classified as held for sale. Classified as held for sale means the management has decided that okay, we will sell off this particular business. So in that case also, you will show the net income in the section of discontinued operations separately. A disposal component or a group of component is reported in discontinued operation if it represents a strategic shift that has or will have a major effect on the entity operations and financial result. So this is very, very important. What is it saying? It is saying that not every discontinued operation you have to report. For example, if I am shutting down a plant somewhere, small plant somewhere, that need not be a discontinued operation. But if I am doing a big exit, for example, yesterday we took an example of the Citibank exiting India. Now it's a huge part of Citibank's business, and hence that has to be presented separately. So it has to be a major geographical area, major investment, or a major line of business. Okay, so please understand it has to be major. Some random closure of plant, some small closure of branch and division. For example, SBI closes one branch. State Bank of India, which has thousands of branches, it closes one branch. That is not discontinued operation because it is not significant, it is not material. It will not have a material impact on the financial statements. So let's look at this example. A is a, so one thing I have to keep in mind is you will get all of these, very difficult to pronounce names. So don't worry about those difficult names. What you have to do is you just see that, okay, this is the name of the company. It is a food service company. That food service company that delivers frozen food products to food service provider. Clients include fast food restaurants, houses, home delivery diet companies, institutions, schools, and etc. The fast food restaurants have been the largest segment of the business in revenue and operating profit. However, that division is now forecast to begin to decline in revenue because the public is looking for healthier options. The company has decided to sell its fast food operation, instead focus on selling on locally operated restaurants offering healthy fare. So some description of business nutshell is they want to discontinue. Such restaurants will generally show lower revenue per unit but higher operating profit per unit. Because the fast food division is the largest component in terms of revenue and operating profit, it represents a major strategic shift. So this is very important and will be reported as a discontinued operation. No. When you have a discontinued operation, you will present results of the operation. Result means what is the net income or net loss after considering the tax effect. Then you will show if there is any gain or loss on disposal of component and impairment loss of the component. So basically, if you have to understand this, say there is a division. This division is generating revenue of 1000, has generated revenue of 1000, expenses of, let us say, 800. So 10,000 minus 800, this is income before tax. Let us say tax at the rate of 20%, 40. So net income is 200 minus 40, 160. So you will present 160 in the financial statements. On the P&L, you will say income from discontinued operation, net of taxes is 160. Okay, that is the first thing. Second, let us say this division has net assets of 5,000. Sale value is 6,000. So gain on sale or gain on disposal is 6,000 minus 5,000, 1,000. Tax, let us say on capital gains, you have to pay 25%. So 10,000 into 25% is the tax. And net is 1,000 minus 250, 750. So this is called gain. So what you are doing, you will disclose the result of operations. You will also disclose the gain or loss on disposal. And then you will also disclose impairment loss. Now, impairment loss is basically, we'll understand this subsequently. Impairment loss is basically the asset is not having value as much as the value as it's shown in books. So for example, we have not yet sold. Okay, we have decided to sell. We have decided to sell. Now, when we have decided to sell, carrying amount means amount as presented in the balance sheet is 1,000. For example, another example, and expected, we call it something called as recoverable amount, is 200. So sorry, 800. So this 1,000 minus 800, this 200 is called impairment. How to calculate what all in that will come to it subsequently. But for now, understand something which I have not sold, something even which I am using. It need not be that I want to sell. Even something which I am using, maybe the carrying amount is higher, the recoverable amount is lower. So the difference is treated as impairment loss. Okay. So you will disclose impairment loss. And if at all there is a reversal of impairment loss in the future, that also you will disclose. Okay, how to recognize, how much to recognize, will come to it subsequently. For now, you understand these three parts. When will you report? You will report in the period disposed or held for sale. So either I have already sold, in that period I will say there is this income or loss from discontinued operation. Then, or when it is held for sale. Held for sale means I have decided that I will sell it. So even in that case, you will, in that period, you will disclose. The results of discontinued operations of a component are reported in discontinued operation for the current period and all prior period presented. So even if I have decided to sell in this year, for the previous years also I have to calculate and present that number subsequently. And when it is done? It is done when it is disposed or held for sale. So sometimes what happens is you have held it for sale. Let us say you have decided that you will sell a division, but immediately the division will not be sold. The division will continue to operate for some time. Even that income or expense is shown as a part of discontinued operation. Okay. Then once the management decides to dispose of the component, the assets within the component are not depreciated or amortized. Basically meaning, if I have decided that I will dispose of a particular investment, particular component, then we will not depreciate or amortize that particular component. So here we showed, right? We have some net assets. On these assets, whatever is the asset component, on that we will not charge any depreciation. A component which is classified as held for sale is measured at lower of its carrying amount or fair value less cost to sell. So something which I called, which I mentioned as recoverable amount here. So for example, if the carrying amount is 2000, fair value of the component is 1500, we'll incur cost to sell of 100. So the amount that you will receive is 1500 minus 100, 1400. So my carrying amount is 2000, my recoverable amount is 1400. So this 2000 minus 1400 will be recognized as loss. Okay. Now another scenario, carrying amount is 2000, fair value is 2500, cost to sell is 100, valuation, the net amount is 2400. Here, because it is a higher number, 2000 is higher number, we will not recognize any loss, we will not recognize any profit. We will recognize profit only when it is ultimately disposed. How do you present and disclose? It is presented as a separate component of income. We have seen that. The results of discontinued operations, net of tax, are reported as a separate component of income below income from continuing operation. And a gain or loss recognized in disposal shall be disclosed either on the face of income statement or in the notes of financial statement. So in the notes, you will give additional disclosure. In the notes, you will give additional disclosure. So you have some question. There will be a financial note for discontinued operation. Yes. Why have we discontinued? What all have we discontinued? All of that has to be explained. In the income statement, we'll include, yes, we'll include only the P&L or the income, net income. Okay. See, there is no harm in disclosing revenue and expenses, but that will make the income statement very much elaborate. So any additional disclosures that you have to give, you will give in the notes. Revenue will be shown only for continuing operations. Disposal of equity method investment, basically if you have investments in other companies like associates or subsidiaries, when that is being disposed, you will follow this. Equity method we'll understand in a subsequent chapter. Significant impact, does it have any threshold? No. So it is more about management estimate. Okay. There is no materiality amount, it is management judgment. What is gain or loss on disposal? I have just explained it here. Gain or loss on disposal is when you sell that asset. Let us, if the sale value, so here you can see the net assets, the sale value, what is the gain on disposal? Impairment loss, can you explain again? We'll cover it separately. I don't want to, get it into right now. Why prior period? So that to make it comparable. Otherwise, what will happen? In the current year, you will show less revenue. In the previous year, you will show very high revenue. How will the users know what is the change? So prior period also is restated. Net asset is your total assets minus liabilities. What is difference between held for sale and discontinued operation? So discontinued operation will include anything which is any component, major component held for sale or already sold. Held for sale is just a classification that, okay, now I am planning to sell this particular thing. Now, held for sale is a wider term. It will be used for individual assets also. For example, if I want to sell my car, so that car also I can classify it as held for sale. But discontinued operation, the car will not be a discontinued operation. So what you can say is, if I hold something for sale which represents a major component of my business, then it is a part of my discontinued operation. Amortization is for intangible assets. Yes. Avinesh, what is not clear? Okay, see, You might be, some of you might be concerned about what is this impairment, what is this held for sale, and all of that. All of these points will cover up again subsequently. That is why I'm not going very slow. Okay. So if you have any, as I told, if you have any specific question, I'm addressing them. Yeah. One question was why it is zero. We don't recognize anticipated gains here. Anticipated gains are not recognized here. Yes, when we say impairment, impairment is only for losses. Difference between impairment and depreciation will cover when we do impairment. But for now, for your understanding, depreciation is done every year on a systematic basis. Impairment is when, so what is impairment? You would have heard of this term called hearing impairment, where there is a loss of hearing capability. So impairment, when I say, if the machine will not give me benefit that I have expected, that and then it, so for example, asset is worth 10,000. But by using the asset or by selling the asset, I'll get only 8,000 or 7,000 maximum. So the asset does not give me 10,000 of benefit. The asset gives me only 7,000 of benefit. So we say there is an impairment of 3,000. What is depreciation? Depreciation is systematic. Every year you charge depreciation. Impairment doesn't happen every year. Profit or loss on discontinued operation is not a notional amount. Again, impairment, as I told you, we will discuss in a separate chapter. That point of time, you will understand how do we initially recognize and how do we subsequently recognize. Okay, so again, I'm the reason why I'm slightly faster here with numbers is here you are not calculating anything in numbers term. Okay, a lot of these things which are new to you, impairment losses, initial recognition, subsequent recognition, all of that will come back again. So that way, don't worry about it. Till when will we charge depreciation? We will charge depreciation till the date of classifying it as a discontinued operation or held for sale. If discontinued in mid of the year, you will calculate for those mid of the year period, 6 months only. You will consider depreciation till the mid of the year, whenever you are selling it. A disposal group can also be a discontinued operation if it is a major part. Yes, assets here are all post depreciation. No, we will not consider full year operating P&L. What we are doing is, we are considering the P&L till the date of disposal for discontinued operation. This Excel, whatever is being used, it will be available to you mostly tomorrow. There is some issue in syncing. So by tomorrow or by Tuesday, I would say maximum you'll get it. I don't know. So one thing I'm not able to understand, I've told multiple times that I will be teaching impairment separately. For now, just understand that with the example that I've given, there is something called as impairment loss. So if you keep on hanging on to what is impairment, we cannot continue the class further, because we have a separate in detail discussion on impairment and we'll cover it there. For now, what is important for you to understand is, if the carrying amount of that disposal group or the amount in the balance sheet of the discontinued operation is 2,000, fair value is 1,500, cost to sell is 100, so the net amount that I'm expecting to receive is 1,400. This 600 is called impairment. If you understood this is sufficient. How to calculate, what will be the subsequent measurement of this, when will we depreciate, when will we not depreciate, all of that we'll discuss when we go to the impairment topic. But even after telling 3-4 times, I'm getting questions on impairment only. So there is one interesting question. If after 2 years, we understand that the life of asset is less than anticipated, difference is impairment loss? No. If you are changing the estimated useful life, the change is still accounted as depreciation. But impairment basically means, let us say if I have a machine, this machine has a book value of 10,000. Now, when I say machine has a book value of 10,000, what it means is the asset will give benefit of 10,000. That is why I show the machine at a value of 10,000. But say for example, by using the machine, I will get benefits of 7,000 only. And by selling the machine, after considering all the cost, I will get benefits of 7,500. So what will I do? I will sell the machine. Okay. So I'm saying I have a book value of 10,000, but by selling the machine, I can get only 7,500. So we cannot show the asset at 10,000 because I am not getting the benefit of 10,000. This difference, your 10,000 minus 7,500, 2,500 is my impairment loss. If, for example, benefits I would have received is 8,000, then I will not sell the machine. So 10,000 minus 8,000 will be the impairment loss. Okay. I think yesterday I gave the example. I have not yet taken the example today. So yesterday, when we did this example, I think we mentioned the. So we're mentioning like this. I'll just highlight this so that it is. Okay. So a quick recap. Let us do once again so that again it is revised properly. What is a discontinued operation? A discontinued operation is maybe a component, maybe a group, or a subsidiary, which the entity a discontinued operation is maybe a component or a group of component or a business division or a branch or a non-profit activity which the entity has either disposed or has classified as held for sale. So either disposed means sold, or they have decided that they will sell. So that is what is discontinued operation. Okay. A disposal group or a component is reported in discontinued operation if the disposal represents a strategic shift or will have a major effect on the entity's financial statement. So if there is a major shift, means in the way I do the business, for example, Citibank exited India operations. So it represents a major component of the business. It represents a major strategic shift in the business. So that is what is a discontinued operation. So it can be a disposal of a major geographical area, major investment, major line of business, right? Then what will we disclose in the discontinued operation segment? We will disclose results of operations, that is income or losses, gain or loss on disposal. So if you sell it off, what is the gain or loss? If we have not sold it off, if there is any impairment loss, that will be disclosed. Initial and subsequent measurements you will understand when we do impairment, because if I explain now, you will not be able to understand anything out of that. When do we show the discontinued operation? In the period in which it is disposed. Prior period items are also restated. Depreciation is not charged once it is classified as a discontinued operation. Presentation, you can present it as a separate component of income, or you can disclose it in the face or in the notes. In the comparative year also, items related to the discontinued operation, the income related to discontinued operation, all of that is presented separately. In year 3, so what happens is, in year 3, if you still have the discontinued operation, for example, you have decided to sell, but you are not able to sell. So in year 3 also you may have some number. If in year 3 the amount is 0, you will show it as 0. Sir, when the entity has decided to discontinue the operation, it will show only net income. How will the accounting be done in comparative year? In the previous period also, you will show that discontinued operation separately. In the subsequent year, if there is anything related to discontinued operation, you will show it separately. If there is nothing, then you will show it as 0. Okay. So let us look at this question. This will give more clarity on what all we have discussed. The trial balance below presents the income statement accounts for year 1 from all sports company trial balance. Golf division of all sports has been losing money on. See, and one more thing is, it is not that we will sell only when there are losses. Sometimes when there are gains also we can sell. The golf division income statement accounts all are presented below. Board of Directors decides on April 30th of year 1 to dispose of the golf division. The carrying value of the golf division, carrying value means amount shown in the books, all the assets minus all the liabilities pertaining to golf division, the value, the net amount is how much? 4 million. And its fair value less cost to sell is 2.2 million. Means what? The net assets, what we have in the books is 4 million. The fair value, if I want to sell it today and if I consider the cost to sell, I will get how much? 2.2 million. So this difference is called impairment loss. When will that be recognized? That will be recognized on April 30th. After months of negotiation, the division's net assets are sold on June 30th of year 2 for 2 million. Okay. We said we want to sell. So we calculated what is the amount. That amount came to 2.2 million. On which date? On 30th of April. But when we sold it, we could sell it only for 2 million. We sold it in the next year. So that is the difference. The golf division has continuing losses in year 2 of 200,000 per month. Income tax rate is 40%. Assume that all sports income from continuing operation is 4.8 in year 1 and 5.2 in year 2. How will we present it? Okay. So here you have sales, cost of goods sold, all of these details are given and we'll calculate the impairment loss. Okay. Here for all the components and for golf division, they have given separately. So we'll see how do we present it. How should the disposal of the golf division be reported on all sports company on a year 2 financial statement? Now, first, you will present income from continuing operation. So we'll actually do it, that will make it more simpler. Okay. They have given income from continuing operation is 4.875 and 5.2 million. This is example number 3. So do we calculate? You can calculate also, but they have anyways given us after calculation. So let us consider that income from continuing operation is 4875 and 5.2 million. Okay. Now, first thing what they have said is they decided on April 30th of year 1 to dispose of the golf division carrying value. So working one, we can make a working. Carrying value is 4 million. Fair value less cost to sell on the date of classification is 2.2 million. So I have asset worth 4 million in the books, and I will get by selling this particular, and by selling this particular as what do you call, selling this particular division. And if I consider this cost to sell and all of that, the amount that I'm expecting to receive is 2.2 million. Now the thing that you have to keep in mind here is this will result in a loss. Okay, it's not a loss, but there is some issue. Are you able to see the shade screen? I'm seeing some black patches. Okay, right. Can we say NRV is equal to face fair value less cost to sell? Yeah, kind of. These are used interchangeably, so we can show it. Okay, so now here, what we will get by selling it, or fair value less cost to sell is 2.2. So there is a loss. This is called impairment loss. Okay, so impairment loss of 1.8 million is recognized. Impairment loss is not 2.2 million. Impairment loss is 1.8 million. The amount, so for example, if I have a phone worth 10,000, I'm saying that my phone is worth 10,000. In the market, they're saying you'll get only 6,000. So the 10,000 minus 6,000, whatever is there, that is called impairment loss. Is that clear? Okay, simple calculation. Now, what if fair value less cost to sell is higher number? Then it is not an impairment loss. You will not recognize any impairment loss. Okay. Now, again, I'm repeating, carrying value, whatever I'm showing in my books is 4 million. 2.2 million is what I will get if I at all sell the division. So there is a loss of 1.8 million, right? Now, when it comes to discontinued operations, so one we have already shown, income from continuing operation, right? That we have already shown, and that is net of tax number. If they give it, it is net of tax number. Now, once we have shown the income from continuing operation, the next thing is we have to show discontinued operation. Correct? Discontinued operation. So now we have to calculate what is the result of discontinued operation. So here they have given to us in the question. Revenue of golf division is 2.5. Cost of goods sold is 1.85. Then freight, commission, advertising, all of this they have given separately. And impairment loss 1.8, what we have calculated, that also they have given. So this 2.5 minus all of this, if you do, how much will we get? It's a simple calculation, you can do it. 2.5 minus all this, when we do, we get loss from operations of 2.4 million. So $2.4 million. Okay, it's a simple calculation, you can do it on it. Now, if there is a gain, we have to pay tax. If there is a gain, we have to pay tax. If there is a loss, there is tax saving. Okay, how is there a tax saving? We will understand when we do income taxes. There is a tax saving because of this loss, I have to pay lower taxes. Say for example, my total income is 4 point whatever is the number here, 4.875. If this loss was not there, I had to pay tax on 4.875. Now, because there is a loss, what I have to do? I have to pay a lower tax. So we say there is a tax saving of how much? 40%. So this is a loss tax savings of 40%. Income net of tax is 2.4 minus 40%, you get 144. Same way, impairment loss. I have 1.8 million. On this also there is a tax savings of 40%. So this minus this is 10.8 or 1.08 million. So the numbers you will present here is results of discontinued operation. Income from discontinued operations net of tax 1.44 and impairment loss net of tax 10.8 million, 1.08 million. Okay, so that is how we will calculate, and your net income will be sum of all of this. So shortcut key you can use alt equal to sum it up also. Okay. Now coming to second year. Second year also we have some income from discontinued operation. The golf division has continuing losses in year 2 of 200,000 per month. Now, how many months are there? When did we how many months are there? January to June, 6 months. So for 6 months period, they have a loss. For 6 months period, they have a loss. So second year loss when we calculate 6 months, 200,000 into 6, you have a loss of 1.2 million. On this again, you have a thing, this into 40% is the loss, right? Then income net of tax 7.2 million. Then in the second year we don't have any impairment loss because in the second year we have sold it. See, if in the second year they had given us fair value and all of that thing and we had not yet sold it, then there would have been an impairment loss. Now in the second year, because we have sold it, we'll have loss on disposal. Now what is the loss on disposal? See, in the previous year we have we had the carrying value at 4 million. The carrying value has been written down to 2.2 million. So now in my books, the division is standing at 2.2 million. So my carrying amount after impairment is 2.2 million. Sale value or proceeds from sale, they have sold it for how much? 2 million. So my books is showing 2.2. My books are showing 2.2. I have sold it for 2. So there is a loss again of 2 million to the 200,000. On this, there is a tax savings at 40%. This into 40%, you get 80,000. Okay, so net loss on disposal, it is 120,000. Okay, so in the second year, you will not have impairment loss. What you will have is income from discontinued operation net of tax, what we have calculated. And impairment loss net of tax. Not impairment loss, we'll have one more item. Net of tax, it's a loss, not gain. So the net income, you can just use Control R, it will copy it. But one more sheet you need to update. So 436 is the net income. Okay. So that is how we calculate impairment, discontinued operations related aspects. Now let me take your questions. There is nothing called impairment gain. So there is one question: is impairment gain recognized? There is nothing called as impairment gain. You only have impairment losses. Okay, so what I'm doing is, again, I'm changing it. All the questions will come only to host so that others are not impacted. Tax savings part. So think of it. If I have income of 10,000, tax rate is 40%. I have to pay a tax of 4,000. But if say I have a loss also from discontinued operation, 10,000 is the income as it is, and I have a loss of 4,000. So in that case, I need to pay tax of income of 6,000. Tax is 40%. I have to pay a tax of 6,000 into 40%, 2,400. So you see there is a tax saving of 1,600. Why did I get a tax saving of 1,600? Because I had this loss of 4,000. If you multiply this with 40%, you get a tax saving. So that is what is the meaning of tax saving. Income from continued operations includes revenue and expenses from discontinued operations? No. Income from continued operations will include income from your revenue from continued operations, expenses of continued operation. Discontinued operations is presented separately. Why book has 1 minus 40% in tax part? So what they have done is directly, if I have, for example, income of 10,000, loss of 10,000, tax rate is 40%, tax amount is 4,000, net amount is this minus this 6. This I can also calculate as this multiplied by 1 minus tax rate. It is a shortcut formula. So as we discuss subsequently, when we go to bond chapters and all of that, there will be using 1 minus tax rate. At that point of time, we'll be understanding. I have explained you that we will save tax. So this is called tax benefit. That is why it is shown as a negative item. Yes, everywhere you have accounting standards, Indian accounting standards, IFRS. Wherever there are losses, we have this concept of deferred taxation. So when we go to taxation, there you'll be able to understand why are we recognizing this as a gain. See, impairment. So if I say hearing impaired, or if I say the word impair means it is damaged. So there cannot be a gain on a damaged asset. If the losses from discontinued business were more than the gain on continuing business, then you have to evaluate whether we will be able to save taxes in future and accordingly calculate the tax savings. Any further advanced discussion on taxation will cover in deferred taxes. For now, just understand if there is a loss, there is a tax saving which is equal to loss multiplied by the tax rate. So very good question, Atanu. If the question has not mentioned that this is net of tax, how do we say it? So if they say net income or profit, net profit, that is always assumed to be after tax. If they have to say it is before tax, they will mention that it is net income or net profit before tax. Any more questions before we move to the next part? No. So even if you decide, so there is one again very good question. If we decide in mid of the year to dispose the asset, we should proportionately show continued and discontinued. No, whatever. For example, Citibank decided that we will sell off Axis Bank in mid of the year. All depreciation, income, expenses related to Axis Bank will be shown fully in discontinued operation. It is not that for 6 months I will show continued, remaining 6 months discontinued. No. For that operation, for that division, everything will be discontinued. Can you paste the question once again? Because I can't go back and search what question, because I think I've addressed. Right? Savings in tax is shown as income. Any further question on income tax, we will be able to understand only after we complete deferred taxation. From Jan till days of discontinuation. In this case, from Jan till December. Why are we considering 1 minus 40%? I explained it here, no? It is simply 100 minus 40 is 60. So that is how we are calculating. It's basic mathematics. Okay. No need to take screenshot. I will share this Excel file with you. Will the depreciation be charged for first 6 months if we decide to dispose mid of the year? Yes. No. Again, if we decide to so there is one question. I think this will help every one of you understand. No, I'll give it today itself. Don't worry. I'll upload it and I'll give it today itself. Okay. If it's decided in June to sell the asset in September, then 3 months operation will be shown in note. So if you decide in June and you have sold in September, 9 months period is for discontinued operation. So the question is, decided in June, sold in September. Okay. So discontinued operation is from January to September. Okay. So that is with respect to discontinued operation. Yes. From Jan to May, you will charge depreciation. From Jan to May, you will charge depreciation. And the depreciation will form a part of expenses of discontinued operation. So basically, okay. So one thing is you have to understand materiality. If you have decided on, I'll just write the numbers here. Just a second. I'll just write the number here. Decided on June 30th. Sold on September 30th. Okay. Now what will happen is, what will come? Depreciation will be charged till 30th June. Included in expenses for discontinued operations. Okay. First. Second. Impairment. Impairment will be charged as on June 30th. Okay. Then we have sold on 30th September. So January till September revenue minus expenses minus tax will be discontinued operation. Okay. This is sale of a component or division. We are not talking about sale of an asset. Okay. Now, if we sell in the next year, full 12 months will be presented as discontinued operations. I am repeating once again. Once a operation is classified as discontinued operation, from January till the date of disposal, it is shown under discontinued operation. If we decided in 1 year and sold in the next year, for next year there will not be any depreciation. Even if sale happens in year 2, if you have decided in year 1 will be discontinued operation. Sale of business. If the actual sale value is higher, then, so for example, we have charged impairment loss and subsequently the actual fair value is higher, we will show a gain. So January to September, revenue minus expenses is discontinued operation. So in the balance sheet, you will have year 1, year 2, for example. We have decided in year 1. Okay. So you'll have continuing operation. Then you'll have discontinued operations. Okay. Now, when you have discontinued operations, what you are doing, you are showing, you will show amounts till September. But this balance sheet is for 12 months. Our financial statement is for 12 months. You will show amounts till September. In year 2, if you already sold in year 1, year 2 will be 0. No, sir, we did not sell in year 1. Then, if not sold in year 1, then here you will show 12 months. Here you will show till date of sale. Like what we have done in our existing example. How will you have, if you sell in September, how will you have income from October to December for discontinued operation? If you sell here, what our assumption is, you have sold on 30th of September. Once you have sold it, there is no income or expense. That asset is gone. The business is gone. There will not be any depreciation once you have decided it to sell. So in the given example, what we did here, income from discontinued operation, we took only for how many months? We took only for 6 months. After that, there is no income. Once we have sold, there is no income, there is no expense. Any more questions? Yes, but in this here, this is a separate example here. Here, this is a specific case which was asked by one student. So this is June 30th of year 1 and September 30th of year 2. Now year 1. Yes, Shalini, your question is right. If they decide not to sell, then yes, they will revise the presentation. Once you have classified something as held for sale or as discontinued operation, no further depreciation will be charged. If required, only impairment will be charged. Yes, I will share the Excel file. All depreciation expense for whatever it is till till the date it is classified, in the period in which it is classified, everything will be clubbed for that division under discontinued operation. So here also see this, no, in this given question, what happened? We took full year revenue under discontinued operation, whereas it was classified only on April 30th, but full year numbers we have taken under discontinued operation. Simulation will again cover it, in one of the sessions. That time we can ask if you have any doubt. How does the entity decide what all asset belong to discontinued operation and what belong to continued operation? So if I have to ask you, there's one question. If I have to ask you, how will you decide which furniture belongs to which room? You will know, right? In my house, one furniture, let us say a particular wardrobe, it is in this room, bed is in this room, sofa is in living room. You know it. Same way the business will decide. All of these are related to discontinued operation. You can practice questions from Becker portal. You will have more comfort then. Common expense they will allocate. No. So okay. So we are, I think now one thing I want to clarify to all of you is there are two aspects. One is trying to understand everything of a topic. Second is trying to understand the concepts which are relevant for our practical life and for our examination purpose. Okay. Okay. Now, what you have to understand is our primary target should be to pass the examination. The additional learnings can be done after passing the examination also. We are not doing PhD on discontinued operation. I'm happy that you have so many questions, so many doubts, but if you go too much deep into all the aspects, your preparation for examination will suffer. I'll just give you an example. Okay. I'm not discouraging any questions, but I think after a certain point, we have to create a boundary that, okay, this much is enough for me to understand for now. If I want more information, I can do it after I pass the examination. Even at that point of time, I will be available to you to answer your questions. Okay, so that is one thing. I'll just give you an example. This is again not discouraging anyone to ask relevant question. There is a chapter called leases. Leases, Deloitte, PwC, they have prepared documents which run into 1000 pages just to explain leases. But for our examination purpose, some 15 to 20 pages are sufficient. So our focus should be to have 15 to 20 pages clarity perfectly. If we have more doubts, more questions, we have resources. I am accessible. Subsequently we can learn. Right now, if you are assuming too many permutations, combinations, the core of what we have to learn for the examination will be missed. Okay, so that is my sincere request. Questions are not seen in the chat box because some students have complained that it distracts them when some students ask in between. But from next class onward, in the doubt asking session, what I will do is I will enable it for during the discussion session. Sir, June to September depreciation is not considered. It is considered. I'm telling you, anything related to discontinued operation. See here, you see this, no? Depreciation expense 495,000. This is for the full year or till the date of classification. That is considered as a part of discontinued operation. No. So Mohammed, I take your feedback. Next time when we have this discussion, when I open the doubt clearing part, I will open the discussion to everyone. Okay, right? Now, moving on. Foreign currency transactions. Now, this is again a very important part of our understanding what is foreign currency transaction and what all is included. Let us say there is a company based out of US. Okay, so now since we don't have much questions in clearing, so I'm opening the discussion forum to everyone. Okay, a company is based out of US. The financial statements are presented in dollar terms. Okay, let us say there is an export from US to India. Okay, export to India from US and invoiced in INR. Okay, now for a company which has a currency of dollar, If they have entered into a transaction based in INR, this is called foreign currency transaction. Very, very simple. Yeah, I have muted. Okay, that is called foreign currency transaction. So any transaction that happens in other currency, not our home currency or not our currency, is called foreign currency transaction. Now, the challenge is we have to prepare financial statements in dollar. We have to prepare financial statement in dollar. Now, if we have an invoice in INR, we cannot record the invoices as INR in our books. Okay, so what we have to do, we have to convert that INR into dollar and record that in our books. That is what is called accounting for foreign currency transaction. So, for example, invoice value is 1 million. 1 USD is equal to INR 80. So, what is the USD value of invoice? What is the USD value of invoice? Can someone quickly calculate and tell me? 12,500. 12,500. 1 divided by 80. 12,500. So they will record this transaction in their books as debit account receivable, credit revenue, 12,500, 12,500. This is how we account for foreign currency transaction. Now, I told you this, right? 1 USD is equal to INR 80. This is called exchange rate. So we have two types of exchange rate. One is direct quote, another one is indirect quote. What is a direct quote? Direct quote is basically how much will 1 unit of foreign currency be equal to. Okay, that is a direct quote. Means, or if a lot of students face this challenge in remembering direct and indirect quote, simply think of it. How much does 1 gram of gold cost? Or how much does one chocolate cost in my currency? That is a direct quote. So here if I'm saying for a US based company, how much is 1 INR equal to? That is what is a direct quote. 1 unit of foreign currency, how much is that equal to in my currency is a direct quote. So here 1 INR is equal to 1 divided by 80 because 1 USD is equal to 80 INR. So for 80 INRs, I'll get 1 USD. For 1 INR, I'll get 1 divided by 80 USD, 0.125. Indirect quote is 1 unit of home currency is equal to how many units of foreign currency. So indirect quote will be 1 USD is equal to 80 INR. And always remember, direct quote multiplied by indirect quote is equal to 1. So if I am an Indian company, it is exactly opposite. For Indian company, if I would have to say how much is 1 USD, that is a direct quote. Okay, that is a direct quote. If at all you get confused in the examination, just think of it. What is 1 gram of gold? The quote of 1 gram of gold is a direct quote in my currency. Same way, the quote of $1 in my currency is a direct quote. Foreign currency, some terminologies. Exchange rate is the price of 1 unit of currency expressed in units of another currency. Direct method is the domestic price of 1 unit of another currency. Indirect method is the foreign price of 1 unit of domestic currency. So we have already discussed it. Current exchange rate. Current exchange rate is basically the rate which is prevailing at the current period. Currently, if I have to see $1, what is the value? That is my current rate. Denominated, if there is any transaction which is denominated in a foreign currency, what it means is basically a transaction is denominated or fixed in the currency used to negotiate and settle the transaction. So denominated in a foreign currency means the transaction is either settled in foreign currency or the transaction is either negotiated in foreign currency. That is when we say it is a foreign currency transaction or it is denominated in the given it is denominated in a given currency. Now let us say Sonia, do you still have confusion on direct and indirect quote after my explanation? FCU. Okay, so I'm repeating once again. Whenever we say direct quote, you think of it. How much does it cost for 1 unit of foreign currency for $1? Let's say you're in India. If you're in India, okay, you think of it. How much will $1 cost me in INR? So $1 is equal to 80 INR is the direct quote. No, forum is open. Forum is open. Student has asked question directly to me. Forum is already open. Okay. Now, how much will $1 cost me is direct quote for me. How many dollars can I buy with 1 rupee is indirect quote. That is the simplest way to remember and understand. Is that clear? Okay. Now, so company sold goods to a foreign customer. Invoice value is 100,000 foreign currency units. I have just written FCU, just a foreign currency. Exchange rate is 1 foreign currency is equal to 2 USD on the date of transaction. It is not settled on the balance sheet date. So on 31st December, it is 1.9 rate. On settlement date, it is 2.2 rate. Now, how do we account for it? So one is initial recognition. You will use rate prevailing on date of transaction. Basically, you will say debit account receivable, credit revenue. How much? 100,000 into 2. 100,000 into 2. So here it is 100. Then on 31st December. And tell me one thing. We have to receive 100,000 foreign currency units. Okay, we will not receive in dollars. We will receive in foreign currency unit, and subsequently we will convert it to dollars. Now, on the date of transaction, I was expecting it will be 2 per dollar. On the date of balance sheet, it has come down to 1.9. Now, for me, see, for me, this amount that I'm receiving from the customer, I know I will receive $1,000. Now I have to value this amount at $100,000. Sorry, 100,000. I'm repeating. I just got mixed up between dollars and foreign currency. I know I have to receive $100,000 from my customer. Again, I said dollars. I know I have to receive 100,000 foreign currency units from my customer. When I sold it, I was expecting it is $2 per foreign currency. Now it is 1.9. So first thing is I'll receive lesser value. So there is a loss. So any loss on amounts that I will be receiving, I have to recognize. Yeah, I think a good idea, Srinivas. Let us just call it euros. So on 31st December, what happens is rate on date of transaction is 2, rate on balance sheet date is 1.9. So there is a loss of 2 minus 1.9, 0.1. Total loss 0.1 into 100,000, 10,000. Basically, see, this customer will give me foreign currency euros. I will receive euros. I'm sitting on a loss. I'm looking at a loss on the euros. So this loss will be recognized on 31st of December. Now, if there is a gain, that gain will also be recognized on 31st of December. Now, sir, why do we recognize gain? We are recognizing gain or loss here because that is our money. We have to receive 100,000 euros. What is the worth of that 100,000? That is what we have to recognize. Okay. So on 31st of December, what we will do, we have to recognize the loss. Customer will pay us lesser amount. So debit loss, credit account receivable, 10,000. On settlement date, rate is 2.2. On 31st December, the rate is 1.9. So now we thought we will receive 1.9, but we actually ended up receiving 2.2. So there is a gain of 2.2 minus 1.9, 0.3. So that you will recognize on the settlement date. On the settlement date, what will happen is customer pays euro 10,000. So sorry, euro 100, 10,000 or 100,000, 100,000. So debit bank 100,000 into 0.3 into 2.2, 22,000. Credit account receivable. We have shown account receivable in the previous period balance sheet at 20,000 minus 10,000. Sorry, 200,000 minus 10,000, 190,000. So we have received more. So that will be a gain on foreign exchange. 22,000 minus 19,000, 30,000. So in net effect, we have received or we have made a gain of 20,000. Changes in foreign currency rates will not be debited to revenue. It will be shown as a losses under other expenses separately. Why gain of 0.3? Because we have recognized loss of 0.1 here in the previous year. So in the previous year, we said on the balance sheet date, we will receive at 1.9. But now we have received at, what do you call, 2.2. So 0.3 is the gain. Yeah, it is unrealized as on 31st of December, but it is recognized in P&L. Yes, on 31st of December. So because of changes in exchange rate, there could be a foreign exchange transaction gain or loss if the exchange rate changes between time of purchase or sale and the time of actual payment. For transactions which are not settled on the balance sheet, a foreign exchange transaction gain or loss is recognized in current net income and is computed at each balance sheet date for all transactions denominated in foreign currencies that have not been settled. The difference between exchange rate to use the recording transaction and exchange rate on balance sheet date is unrealized gain or loss and recorded in foreign currency in the income statement. So finally, that's what happens, no? So for example, you have to pay $1,000 to Becker, or not Becker, for example, for your scheduling your test to the testing agency. That $1,000, when you pay that rate, that day's rate will be considered for inflow or outflow. AS11 is the corresponding Indian standard. We checked on 31st December only, no? We did not see. You have to check on each reporting period. So if there is a monthly reporting period, you have to do it on a monthly basis. Yes, it is reported under other income or expenses. Is there any specific site from which we can take the exchange rate? There are a lot of sites. You have exchange.com or something is there. You can use the official bank site also. Final report. See, for reporting also there is quarterly reporting as well. So if there is quarterly reporting, you have to do it every quarter. This is basically valuation part. I have to receive this is basically I'm valuing my money. Okay. And because I'm valuing my money, that is the amount I'll receive from the customer, it is considered in the income statement directly. Okay, I'll prepare the ledger, no problem. Confused with quoted price method. What is confused with quoted price method? If you can give me, ledger will be nil. Yes, for every quarter, every time you prepare the financials, you have to check. Ledger will be nil. Let us prepare the ledger. To revenue 100,000, by loss 10,000, by balance 190,000, to balance brought down 190,000, gain 50,000, by bank 20. So next date is 0, no? Yes, it is net income only. It is not other comprehensive income. It is shown as a part of net income. Direct and indirect method. Direct and indirect method, if you are getting too confused, Tanesh, what you can do is always remember 1 USD is equal to 80. This is direct quote for someone using INR. Okay, just try to remember this. After you do some transactions or some questions, you'll be able to understand. We sold inventory, which is normal course. Yes, it's normal course. Sale is shown as revenue. Exchange loss or gain is shown as other income. Loss of 10,000 entry. Okay. So I think we have covered enough clarifications, and today we'll end it here. And from next class onwards, whenever we have the next class, from that class onwards, so we'll have classes till 8 o'clock. Okay. So just wait for some time. I will share the link, and subsequently, you can use those links to access the classes. Please be online. There's no class next week. See, Srinivas, we are not talking about money market transaction. We are talking about a normal import export. If there is gain on 31st December, the journal would be debit the account receivable, credit the gain. No class on 4th and 5th. Comparatives and all will complete subsequently. There's no class next week. This is the entry for loss. So what I'm doing is I'm attaching the file today. There is some issue in sharing. I'll rectify it by tomorrow. So yesterday's and today's notes can be accessed through this file. It is 0 now. Why are you saying it is not being nil? I don't understand. This is 220 this side, and this is 220 this side. I think there is already a Telegram group which you can use. Okay. So for any issues related to not able to, I'm sending the file now. Just wait for a moment. I'm sending the file. Just wait for 2 minutes. No. Okay. So please download this file. And you can go back and you can refer to it again. Doubts in MCQs is Telegram forum only. You have to search. Previously, there would have been, most of the MCQs would have been addressed in the Telegram group. We will also be solving some questions in the class. At that point of time, you can share the questions you want me to solve. I'll take it up there. See, gain is revenue is what? Revenue is amount you receive from sale of goods and services. If you receive more amount or less amount from the customer, will you say that your bad debt is your, bad debt is not there? Okay. So it's something like if the customer paid me a higher number or reversal of bad debt is my revenue. No, revenue is something which I get when I sell my products. Okay. Thanks a lot. Please send again. Okay. I'm sending it again. Thank you, Basil. So I've sent the file again. Sir, while doing practice test, I get 70 to 80% correct. If you want to end test and go back to MCQ and sim, should the end test? No, you can do. See, first time 70-80% is good. Whichever questions you have made mistakes, make a note of it separately and revise those concepts. If you are not able to join Telegram group, please contact to the student support team. And long-term liability is not F1. Next is, see, we don't have class on 4th and 5th. We have class after that. Okay. LinkedIn, you can search Suraj Lakotia, Indigo Learn. You'll be able to find it. Either use my email ID or search you'll be able to find it. See there. Okay, search with my name, you'll find it. See, for now, we will do in this particular set, we will finish F1 to F4. Okay, this first module, what I meant. After we complete this, I will tell you what I will be taking up next. Ignore, see, just keep the Excel for dates. No, just keep the Excel for dates. Okay, I will be there. We will complete the syllabus. That is more important. Okay. Chalo. Thanks a lot and have a nice day.